What is going on, everybody? Welcome back to Trading Learning 101. Today's video, I'm going to show you guys how to view the overall market, break down the market, look at different sectors, see the big picture of what the overall market's doing, and different ways to track different sectors, indexes, ETFs. We're going to go over a lot of great and important stuff. And everything I'm about to show you in this video, like I said, is very important if you're interested in day trading, investing, or just tracking the market. There's going to be a lot of great important topics that I'm going to go over in this video that I hope will help you all out a lot. So let's jump into it. There's so many things that you could focus on in the market, and there's so many different sectors, markets. That's what's so fascinating about the stock market is there's just so much stuff out there that you don't have to particularly focus on just one thing. You could find whatever you're interested in and just track it. And that's why I laugh when all these trading gurus come out with Watchlist and stock picks for all the beginner traders out there. You don't need to follow trading gurus are following. All you simply got to do is break down the market, focus on whatever you're interested in, and track it and follow it. Break it down. Do your own due diligence, do your own research, and you'll be all right. So let me bring over and show you how I have my setup. I have my watch list right here. I'll actually bring this up bigger so you guys can all see. So I'll have my weekly watch list, and then through the week, Monday, Tuesday, Wednesday, Thursday, and Friday, I'll just add stocks every single day to my new watch list. With this video, we're going to talk about the overall market and breaking down the market from the S&P 500 to the NASDAQ, Dow Jones, to sectors and ETFs. So what I do, and you can all do as well when you're creating a watch list or tweaking around with your trading platform, get your watch list up and ready, have a market tab right here, and just have all your major stock indexes in this market tab, like the VIX, the Dow Jones, the SPY, the NASDAQ, and even a couple inverse ETFs like TVIX and UVXY. Put in the VIX in on the market watch list. If you don't know about the VIX is really important. What it really is, it's the fear gauge is what they call it. It's the volatility index. Whenever the VIX is above 20, the market is very, very volatile. And that's when they call it the fear gauge. When it goes above 20, that's when fear starts to get in, and the market gets very, very volatile, and you'll see these huge, huge, huge swings. Now I'm recording this at the end of January 26th of 2019. Now in December of 2018, we had a little stock market crash. We just seen the market sell off huge. And right in this area right here, you could see it broke above 20, and this hit a high of 36, letting us know that the market got very volatile and we had a big sell-off, and this started to spike up. So I like to have the VIX on my market watch list to know where we are at currently. The past few weeks, the market has been kind of slow and going sideways. We haven't really been seeing much action, and it's been kind of slow. And we can see the VIX right now, it's red and it's below 20, and it's hitting lows from the past few months. So next up, I'll have the Dow Jones, and every day just tracking these major stock indexes and seeing how they're performing. Are they coming up to major resistance areas, support areas? Where are the moving averages? Is there any recent news that's pushing the market up or having the market sell off? And every day, to me as a trader, it's really important to check these and see how the market's performing. 3 out of 4 stocks follow the overall market. So I'll check the Dow Jones. You got the SPY right here, which is a spider S&P 500 ETF. So you got the SPY, the SPX. It's really all the same thing when it comes to the S&P 500. This is the actual S&P 500 at 2,664. Now, no one's really going to trade the major, no one's going to buy it at 2,664. So that's why they come out with these spider ETFs, like the SPY, having it at 265. So going back to the market watch list tab, just compile it with all the markets, the SPY, the Dow Jones, the NASDAQ 100, the VIX, the Qs, and every day, every week. Break it down, start with the daily chart, see where it's at, see where the price is at. Is it at any important levels? Any chart patterns forming? And keeping in mind, 3 out of 4 stocks follow the overall market. So if the SPY or the NASDAQ is coming up to a major resistance level, it's more than likely going to bounce off that resistance level and then start selling off back down. As a trader, as a day trader, and you're trying to buy a breakout in the overall market, like the SPY and the NASDAQ's at a resistance level, you're not going to get that push to have a breakout. Again, that's why it's important to keep an eye on the overall market. When I'm trading during the day, I'll always have a chart on my other monitor, a little chart of the S&P 500 intraday to see how it's performing on the day. Is it surging up, breaking up? Is it selling off? Are we having violent swings? I always like to keep track. So now that we got the overall markets out of the way, let's jump into the ETFs. Now, there are all kinds of ETFs that you could go off and track to see which ones you're interested in. A site that I like to use is this site right here, Direxeron. Since I'm a day trader, I like to trade in and out of stocks within minutes, maybe sometimes hours. I'm in and out of a stock in a day. I don't hold on. I'm not a long-term investor. So I'll go to the leverage inverse ETFs right here, and they got it broken down by how much risk you want to follow. Times 1, they're not going to move that much. They're going to move pretty slow. Times 2 is medium. Times 3, they move a lot. When the S&P 500, let's say, so if we're going to track the S&P 500, the inverse tickers, which are ETFs that move opposite of what the S&P 500 does, is TVIX and UVXY, which are 3 times leverage ETFs. So when let's say the S&P 500 starts to break to the upside, if we're going under a times 1 ETF, the volatility of it is going to move times 1. If it breaks to the upside and you're watching a times 2 ETF, it's going to move 2 times as fast. And then 3 times ETF, it's going to move, the volatility of it is going to move 3 times faster of what the SPY is actually moving. So that's keeping an important reminder in mind. Or if you don't know what the times 1, times 2, and times 3 ETFs are. Going into ETFs, they break it down. They have ETFs pretty much for everything. There are so many inverse ETFs, bear, bullish ETFs, from technology, robotics, oil, gold, retail, real estate, anything. And I use this site to find out what I want to track. And they break it down by sector. So let's say you're interested in gold. Gold would be right here, NUGT and DUST. And these are 3 times inverse ETFs. Leveraged ETFs. 3 times leveraged ETFs. JNUG and JDST, another gold 3 times leveraged ETF. So if I come over here real quick, let me bring back up my charts. So JDST, you see how it has these spikes up and then it recently sold off and it had a little bounce up. What moves inverse with JDST is JNUG, JNUG. I should have set this up a little bit better to actually compare it. Actually, hold on. I'll come over to market strength right here. This is how I have it set up. So just like the SPY and the TVIX, they're both inverse. This is an inverse ETF, TVIX. So whatever the SPY does, TVIX is going to do the opposite. And you can see how on the daily here, the SPY had this sell-off right here. And on the TVIX, it had a spike and it ran up. After this sell-off on the SPY, it rallied up, and what happened to the TVIX? It sold off. And then now we've been starting to go sideways in this market, and you can see it going sideways a little bit right here. So pretty much majority of these ETFs, they're not somewhat of, you don't invest into them, you trade them. Now the person who invented the Vanguard ETFs just passed away. This guy right here, John Bogle. So he just passed away. I believe he was 90 years old when he passed away. Going back to the leverage ETFs, it's going to be hard to really explain in depth about all of this stuff. That's why you're going to have to go off and dig more and learn about this. I'm just opening everybody's eyes to what's out there. It's going to take time, and you're going to have to put the research in to learn about all this stuff. And this is where it comes in. There's so many ways to make money in the stock market. You just have to learn about it, study it, and come up with a plan and a strategy to capitalize on it. And ETFs, breaking down ETFs and looking at the patterns and chart history on them. That's why, again, I created a oil, gas, and gold ETFs watch list. I went through this whole site here, Direxeron, and I went to the leverage and inverse ETFs, and I like to track the 3 times leverage ETFs. If you don't want that much risk, then go to the 2 times or the 1 time leverage. I like to play stocks that are volatile and that like to move. So I clicked on the 3 times daily, 3 times leverage ETFs, and I just simply went through and I pulled up my charts and I typed in the ticker, and if it shows in the history on the intraday and the daily chart that it likes to move and it corresponds with the other ticker, that it does the inverse or the opposite of whatever that one ticker does, then I'll add it to my list. I added the gold, the oil, natural gas. There's a whole bunch of them right here. A whole bunch. Like I said, ETFs for everything. Bonds, treasuries, oil, gold, natural gas, retail, pharmaceuticals, everything. But then there are some ETFs that don't have really no volume at all. Very, very, very risky because there's no volume in them. Like I said, I just went through and I picked out all the inverse ETFs that I wanted to track, and I added it to my list. So whenever I want, every day, I'll go through and I'll check to see what's moving. Is there anything setting up a pattern and setting itself out for a breakout, and compare it with the other inverse ETF to correlate a move. And I hope you are all understanding this video as I go along. If there are any questions, leave a comment down below and I will get back and answer your comment as soon as possible. All this stuff can be confusing. It can be. It's just you gotta apply yourself to it, learn about it, and dig into it. Do your own due diligence and research and learn about this stuff, because once you learn about all this stuff, it actually is pretty cool, and it's really fascinating to see how these ETFs and stocks and sectors in the market moves based off of world events that happen around the world or news that comes out, spikes the stock or crashes the stock. Alright, so next up, we have sectors here. All your sectors from financial, healthcare, consumer, materials, industrials. Breaking down these sectors are really important. This is when you hear stock gurus or analysis say we have a sector breakout. And when you have a sector breakout, all these stocks in that sector are going to break out and follow the sector. And what I like to use to follow sectors is Findus. So let me pull this up for you right here. And how you get to this, simply go to the home page, go to groups, and you have all your sectors right here based on a day performance, a week performance, a month, 3 months. And you can look at this, click on the charts tab right here, and you can see the chart on how all these sectors are doing. And if you see a sector breaking out, click on it, technology, and it'll pull up all the stocks in that technology sector, and you can go through and analyze all these charts. And then you can scroll back up and you can see you can add in any technical or fundamental analysis if you wanted. So let's say I only want to see in the technology sector stocks under $20. So I'll click that and I'll pull up all the stocks under 20 bucks. I'll go to all real quick, and I need the average volume of these stocks to be above average 1 million. And then it'll filter that, and the list will get smaller and smaller and smaller, but then you'll get to go through and analyze and pick the stocks that you think look the strongest. Going back, just to show you, if you click on the overview here, you have all the sectors right here. And here's the stocks that are in all these sectors. In the financial sector, there are over 1,000 stocks in that sector. You can see the market cap, the dividends, all that good stuff. The change, the volume, to see where the money's at. So let's see where the money is. You got 1.5 billion here in technology and 1.1 billion in basic materials. So I see a lot of the money is here in technology, but which one has the most percentage change? Basic materials with 1.1 billion. It's got 532 stocks in it. So let's click on basic materials, and it's going to pull up all the stocks that are in basic materials. Let's see what stock had the most volume. VALE. Click on that, pull up the chart on this. We're looking at the daily chart on this, and it looked like it had a big sell-off right here. So either the company came out with bad news or something to cause this big sell-off. And then let's look at the intraday. You can see it had a big sell-off here from 1540 all the way down to almost just below $13. Going back, this is how you just break down the market and see how the market's doing. If you don't want to look at it like this, then click on charts and it'll pull up it's the same thing just like this, but you're looking at it in a charts view now. Going through and just skimming through real quickly on how all these charts are looking. You can see pretty much the basic idea of all of these are the same. You know, you had this big sell-off, bounce up, big sell-off, bounce, big sell-off, big rally up there. And that's coming back and keeping in mind, 3 out of 4 stocks follow the overall market. Now that's just going over sectors. Now let me come over here to the screeners. Now we got the industries. Click on the industries. Now the industries is everything. Absolutely everything. Like from auto parts to cement, computers, copper, gold, drugs, drug delivery. Industries are really, there's so many. But again, this is how you can whittle down what industry is on fire and heating up, what's breaking out, which is why I recommend when running your stock scanners, putting the sector and industry as columns in your scanners so you could see all these biggest percentage gainers keep popping up. And if it's in the same sector or in the same industry, you could be having a sector or industry breakout. And then you can run over here to Finviz, and let's say, for instance, toys and games is breaking out. You click on that, you see there's 4 stocks in the industry toys and games, and Funko is breaking out to new highs. You would slowly see if the remaining, if there's anything following in sympathy with Funko, if it's breaking out and having just a huge record day or something. Just like normally in fall and beginning of winter the past couple of years, we have been seeing the shipping companies, Dries, DCIX, Tops, break out. That's what gets the attention. And you're wondering yourself, how do I figure out what's all in the shipping sectors? That's going to be in the industry. Click on the industry, come all the way down to the S's, and you click on shipping. And these are all the stocks in the shipping industry. There's DCIX, GLBS, ESEA, Dries. Go to the next page. There's Tops, PXS, and that's really important for everybody out there. That's how you know and break down these industries and seeing what stocks are in the shipping industry. And again, on Finviz, I love this feature to where you could just, with a click of a button, just change it to charts, and you could quickly just skim through and look at all these charts to pick which ones you like the most, or you could add any technical or fundamental filters if you want. So using Finviz is really important. It is a very important, and I just love Finviz. I use Finviz every single day. That's why I signed up with the Finviz Elite, because I use Finviz every day, and Finviz makes me money. You don't have to. I like using Finviz Elite. Finviz is so important, and I highly recommend everybody always using Finviz. And you can use the free version of Finviz. They give you pretty much everything for free. And we didn't even dig into futures and Forex, and when you dig into the futures, you're looking at crude oil, gas, heating, coffee, lumber, sugar, oats, canola. This really breaks down everything. And coming in here and just looking at natural gas, for instance, you could see the natural gas chart right here. So keeping an eye on the futures is really important as well, in my opinion. So if you're watching, let's just say gold, you're looking at the gold chart here, and you can see gold just had this huge surge up right here. So what I would do is I'd go to the screener, go to the industry, go to gold, and it's going to bring up all the gold stocks. Where's the volume at? At Yamaha and gold right there. Which one changed which ones had the biggest percentage change? Which is TRX, going from 36 to 50 cents, and just breaking all this stuff down. It's that simple. The only thing you got to do is just put the time in it and learn it and do it. The more you do it, the better and faster you're going to get. If you're in love with the stock market or interested in the stock market, doing this every weekend or through the week just checking and digging in, looking at charts, breaking it all down, you're going to start to see the market in the big picture. And you're not going to have to rely on trading gurus who sell you outrageously priced subscriptions to give you stock picks to pump up a stock so they can make money. The only thing you have to invest is your time. Invest your time to learn about all this stuff and you'll be all right. Reach out to fellow YouTubers out there that put videos out just like me to show you that you don't need to buy all this educational stuff. Education's free and it's all out there. All you simply got to do is go to the search bar and search it. That's it. And you could pull up pretty much anything you ever think of. You know, we're in a time right now where everything is at your fingertips. And you're just a click of a button away from learning and getting ahead. You know, I call YouTube University because I've learned so much off of YouTube, and all you got to do is just invest your time, like I said. Put your time in and your screen time in, learn about this and push yourself. Every day you want to learn something new. Every day. After a full year of pushing yourself to learn something new every day, after the whole year, 365 days, you just learned 365 new things. And you just repeat the process over and over and over and over again. Just like all those sports athletes, those basketball players, hockey players, football players. What do when they're not playing? They practice. It's repetition. Getting into a daily routine and sticking with it. Doing the same boring thing every single day. Not sitting around watching TV, playing around on your phone, just killing time, worrying about what other people are doing. Don't ever worry about what other people are doing. Just worry about what you got to do and where you want to go. Put your head down and work hard. I can't preach it enough, and I can't do it for you. I just hope some of you hear the message that you can do it. You just got to put your mind to it, stop talking about it, and just do it. Don't think about it, just do it. Every day, wake up. Jump out of bed. You should, another thing, you shouldn't dread waking up every morning to go to a job you hate. Every day I wake up, I jump out of bed. I wake up before my alarm clock. Shut that off, jump out of bed, brush my teeth, run to my desktop because I love what I do. I love the stock market. I love trading. I love analyzing and looking at charts, seeing what news moves stocks, psychology, trading psychology, psychology on life. And the more you learn, the more doors it opens in your life and you grow as a person. It's just really fascinating how it just changes your life when you just start being more positive and being more positive in what you do. But if you guys have any questions, feel free to leave a comment down below. I'll get to your comment as soon as possible. Please hit that like and subscribe button if you haven't already, and join the Trading Learning 101 community. I love making these videos for you guys, and I have a lot more videos to come in the future. So jump on board, everyone. And now, after watching this, you guys know how I break down the market and just break down these sectors and these industries. Look at these ETFs. And now it's up to you to learn about it, dig into it, and just develop a habit, a daily routine to look at all this stuff. And you could see pretty much where the market's going, where you think it's going, before the market makes its next move so you could possibly capitalize on it. Alright everyone, until next time, have that patience, have that discipline, and study, study, study. Alright everyone, later. So you know I can't end this just epic video for you guys without some bonus content for the hardcore subscribers that I got. The people that know I leave golden nuggets at the end of my videos. This is for you guys. Some tips and tricks and some bonus. When analyzing the market, you want to follow the large cap stocks like Facebook, Apple, Tesla, Google, because whenever they do something, they control the market pretty much. If they come out with horrible, bad earnings or great earnings, they're going to improve and help the overall market, the SPY, NASDAQ, and that's what can push other stocks to lead. So these are like the market leaders. I got Facebook right here. You want to always keep an eye on these as well. Apple, AAPL, same thing. Okay, I just had to switch over to TradingView because my trading platform crashed out. Same thing with Apple. When these guys have earnings or they put out a bad press release, they're going to have an influence on the overall market. So keeping an eye on them and watching them and keeping an ear open for any drastic or important news that these big large cap companies put out. Now, back in the day, it was Walmart that ran the stock market pretty much. And then now Apple, Tesla, Facebook has taken over. Amazon is another one that influences the market. So they're pretty much the market leaders. And after that, you're going to have a Twitter account. Set up a Twitter account, follow Market Watch, Yahoo Finance, CNBC News, Citron Research, and get alerted every time there's a tweet from one of them. So I go up to CNBC, I'm already following it. Every time they put out news, it'll send it directly to my phone. So throughout the day, I can see what's going on. If there's any breaking news, if there's just any bad earnings, upcoming earnings, stuff like that. And like I said, Yahoo Finance, CNBC, Market Watch, Yahoo Finance, Citron Research, and following other well-known traders that are out there. Bow, My Investing Club, Nathan from Investors Underground, Mad Ass Trader, The Wall Street Journal, CNN, New York Times. Follow all of that kind of stuff. That way you get alerted through Twitter on your phone throughout the day to keep up on what's going on. Twitter is like the modern day CB radio that the truckers and the police used to use and still use to communicate with each other. And as traders and as investors in the stock market, this is our CB radio to communicate with each other. If you don't have an email account, get one or create a backup email account if you don't want it to flood your main email with all these emails. You're gonna want to have an email account. Open up an email account, go to Market Watch, subscribe to Market Watch, subscribe to Yahoo Finance, subscribe to CNBC News, and every time breaking news or stock market news, earnings, anything, world disasters, anything that could influence the markets, any big news, any big investor, it'll send you an email notification. That way throughout the day, if you're not at your computer, you're away, it sends an alert to your phone and you see what's going on. And you can pin that email to check it out later and then see how the market reacts to that news release. Another great bonus sign up for your email is stockwatch.com. Come into stockwatch.com, create an account. It's absolutely free. Set it up to get email alerts from these guys. Stockwatch.com, These guys send you email alerts on great content, news, anything that's going on. From news alerts to sector breakouts, industry breakouts, earnings, how has the market closed for the day. I'll be at my normal job, and every single day I'll get email notifications from Stockwatch, and they are actually pretty good Stockwatch email notifications. I'll show you guys one for an example. So here's my email box right here. They send you pretty much a Stockwatch daily summary. And this is from Thursday, January 24th of 2019. It's absolutely free. It sends you all the major indexes on the close of the day, the change in the volume. It gives you a chart. And what's also cool about stockwatch.com is you can, when you create a profile with it, you can customize your portfolio with this and pick a handful of stocks that you're interested in. Like, let's say you're interested in Nike and Microsoft and IBM and AMD. You can select all of those, put them into your portfolio here on Stockwatch, and if any news that comes out for that ticker, it'll send it right to your email and it'll give you a notification sent right to your phone. Same thing with MarketWatch. You can customize. If you sign up for their website, which I recommend doing, it's well worth it. Sign up for it, put your email in, or if you don't want to use your legit email, just create a dummy email, sync it up with your phone, select the indexes you want to follow, or gold, oil, whatever you want to follow, stocks you want to follow, and every time some news comes out that ticker puts out, it'll send it right to you. And that's just some quick tips and tricks, bonus material for you guys on how to follow the overall market. Study your butt off and stick with it, because it takes a lot of hard work to do this, and the more you do it, the better and faster you'll get. You'll see hard work will eventually pay off. For some people it takes a year, some takes 2 years, some takes 3 years, 4 years, 5 years. It all depends on how bad you want it and how much studying you want to put into it and how much time you put into this. But alright guys, until next time, once again, have that patience, have that discipline, and study, study, study. Also, two more things for you guys. I just have so much stuff to talk about, and after I stop recording, it hits me like, oh crap, I didn't talk about this, or I forgot about that. But another great website is stockreits.com. If you want to know what, I love using this site to see what stocks are getting pumped with newsletters. And at stockreits.com, right at the homepage, right here, top 3 stocks newsletters, top penny stock newsletters that were pumped this past week. LEASE had 2 newsletters, Staff had 2, ACHV had 1, and all the way down, leading to the last one, ADIL had 1 newsletter. And there's also some other cool stuff in this website, but I'm not going to go over it. I'm just showing it to you guys. But I'll leave a link in the description down below to all these websites that I've mentioned in this video. And just to see, like I said, what if you want to know a stock that's getting pumped with newsletters, go to stockreits.com and they have a list for you right here. And then the very last one for you guys. If you're interested in anything and you want to know what brokers are the best, what DVDs are the best, trading books, prop firms, the top websites, investimonials.com is the site to go to. Let's say you want to know what's the best brokers out there. Go to Investimonials, click on brokers, and I'm not being paid to advertise these guys. I'm just from the kindness of my heart, and I just love showing you guys what's out there. I'm doing all this for you guys. So, and they have it broken down right here. Broker categories for ETFs, options, penny stocks, for the best brokers. And the top stock brokers is Thinkorswim, Interactive Brokers, and Global Auto Trading. You go top Forex brokers, top penny stock brokers, best futures, and when you click on them, it has reviews from other customers that wrote in reviews from that broker. Let's say you want to look at what's some of the best trading books out there. Click on books. It has the top biographies. They have it broken down into categories for you guys. Best long-term investing, best for technical analysis, recent book reviews right here. Definitely check this site out. This site is owned by Timothy Sykes right here. And if you're involved in penny stocks or the stock market, you all know who Tim Sykes is. Love him or hate him, I personally think he cares about the stock market. And he created this website, so that's really cool. But this is the last one for you guys, and this is investimonials.com. Check it out. I'm sure you guys will love this website. But alright guys, later.